can a machine, an AI, really find those hidden patterns in financial markets? You know, the ones humans might miss in all that noise.
Yeah, it's the big question, isn't it? Is it a really tool or just hype?
Or just fantasy.
Yeah.
Beat. Well, we decided to look into a source that put that idea to a pretty tough test.
A head-to-head showdown.
Welcome to the deep dive. Today we are digging into a really fascinating experiment. It's all about AI analyzing trading charts, crypto, stocks, Forex, the works.
Yep, our sources detail this big test pitting 7 major AI models against each other. Pretty cool setup.
And our mission here is to figure out which AI, if any, can actually be that reliable sidekick, that co-pilot for traders.
And crucially, how you can potentially use what they found. We're going to walk through the whole thing.
Exactly. The experiment itself, some surprising failures.
Oh yeah, there were definitely failures.
The clear winners, and then we'll break down a step-by-step guide based on those findings.
Sounds good. Let's jump in.
So, for ages, traders have been looking for that edge.
Right.
And for a long time, technical analysis has been a key part of that, staring at charts.
Mm-hmm. Patience, a trained eye. Spotting things like a cup and handle pattern.
Which looks just like it sounds, signaling maybe a move higher.
Right. Or head and shoulders, maybe an inverse one suggesting a bottom. Or a bullish pennant, another sign of continuation. It's about reading the psychology and the price action.
It's definitely an art form. Takes time, takes skill.
And that's where AI comes in with this incredible promise. Imagine something scanning thousands of charts, super fast, super precise.
Working 2047, no emotions getting in the way.
Exactly. And maybe costing less than your streaming service. It sounds amazing. But the reality has often been frustration.
People just uploading a chart and asking, okay, AI, what happens next?
Yeah, hoping for magic. And that's what this experiment really zeroed in on.
Right. A serious test. 7 top AI models. Same chart, same task. Find a classic pattern, give a specific price target.
And the first results, honestly, kind of shocking. Most of them just failed.
Yeah, spectacularly. Hallucinating patterns, getting data wrong. It wasn't just unhelpful. It was potentially dangerous advice.
Seriously misleading stuff.
So, boiling it down, what was that core promise of AI for trading that this experiment was really putting under the microscope?
Basically, a tireless, emotionless co-pilot finding those market edges super fast.
Okay, so finding that reliable co-pilot needed a fair test. Consistent, repeatable.
Definitely. And the goal wasn't really about predicting the future, right? Nobody can do that consistently.
No, it was more fundamental. Can the AI even do the basic job of a human analyst, spotting and measuring a known pattern accurately?
So the battlefield, as they called it. They chose a daily Bitcoin chart, BTC-USD.
Why Bitcoin specifically?
Well, a few good reasons. It's super visible, lots of eyes on it, so there's generally some agreement among human analysts on the big patterns. Good for comparison.
Okay.
Plus, it's volatile. That tends to create these big, clear patterns, easier to analyze visually.
And the data is easy to get, I assume.
Exactly. Historical data is readily available, crucial for the test setup.
And each AI got 2 key things, right? The chart image
Yep. A clean, high-res screenshot, no clutter.
and the raw data.
Critically, yes. A CSV file with the daily open, high-low, close, volume, grounding the visual in actual numbers. Very important.
Smart. Stops it from just guessing based on the picture.
Precisely. And the contestants. Quite the mix. From the pricey stuff to free versions.
Like it?
Okay, so you had ChatGPT o3 Pro, that's the $200 a month beast. Then ChatGPT o3, the $20 plus version, kind of the popular choice.
The one many people use.
Right? And the free one, ChatGPT 4o. Also, Claude Opus 4, Perplexity, that AI research tool, DeepSeek R1, which is open source, and Google's Gemini 2.5 Pro. A real spectrum.
And the challenge was the same for all of them. Identical instructions.
Absolutely identical. Upload the image, upload the CSV, then find significant classic patterns, give specific price levels and dates for it, calculate a realistic target using standard rules.
And show your work, basically.
Exactly. Draw the pattern on the chart image and explain your reasoning. Clear, step by step. No wiggle room.
So just to recap that key decision, why was Bitcoin chosen as the test case?
Because it offered clear patterns and broad analyst agreement for a solid comparison.
Got it. Okay, before we get to the winners, we really need to talk about the failures. Because understanding why they failed is, well, super important for anyone thinking of using these tools.
Oh, absolutely. Knowing the pitfalls is half the battle. Let's start with the free ChatGPT, the 4.0 model.
What happened there?
It was like An overly eager but completely untrained intern. That's how the source put it. It tried to find a cup and handle,
Okay.
but it basically just drew lines on random noise. The cup wasn't real, the handle wasn't there, the price target was based on nothing.
Like finding shapes in clouds, you said.
Exactly, finding faces in clouds. The big takeaway. Free general AI just isn't precise enough for this kind of financial work. You can't trust its answers.
Okay, so free is out for serious stuff.
Right.
What about Claude Opus 4? That one's pretty powerful.
Eh?
Right?
Yeah, known for handling lots of info, but a big letdown here. It said it found a descending triangle. Okay, fine.
Okay.
But the visualization, it spat out this jumbled mess of ASCII art, like asterisks and slashes trying to make a picture. Completely unreadable.
So you couldn't even see what it claimed to find?
Nope. And if you can't see the pattern clearly, the analysis is basically useless, right? It's just words.
True. Need that visual confirmation. What about Perplexity?
Perplexity was interesting. It gave a nice chart image back. But the analysis, pure market commentary.
Meaning?
Stuff like post all-time high consolidation. Well, yeah, thanks, we can see that. But no actual trading pattern, no entry points, no targets, nothing actionable for a trader.
So more like a news summary than analysis.
Exactly. A research assistant, not a technical analyst, describes the past, doesn't help with future moves based on patterns.
And then DeepSeek and Gemini, what went wrong there?
The hallucination machines. This was maybe the scariest failure mode.
That's so.
They both confidently identified patterns, but got critical details totally wrong. DeepSeek found a double top, but the peaks it used were way too close together. Invalid pattern.
Okay.
Gemini claimed a symmetrical triangle, but the chart it drew looked nothing like the actual price data it was supposedly analyzing. A complete visual disconnect.
Wow. So they just made stuff up confidently.
That's the danger. High confidence, zero connection to reality. That's pure AI hallucination. And if you trade based on that, ouch, fastest way to lose money.
It's like asking for directions and being told to turn left at the invisible unicorn.
Perfect analogy. You just can't act on it. You know, honestly, I still wrestle with prompt drift myself sometimes when I'm trying new things with AI.
What's prompt drift again?
It's when the AI's output changes slightly over time. Even if you give it the exact same instructions, it just drifts. It really reminds you how incredibly precise you have to be with your prompts to get consistently good results.
Yeah, that precision seems key.
Yeah.
So the common thread in these failures was?
It seems to be this inability to properly combine visual pattern recognition with the strict mathematical precision and the rule-based logic needed for technical analysis. They couldn't bridge that gap reliably.
So pulling that together, what's the most dangerous failure mode we saw with these AIs?
Definitely those confident hallucinations that are just completely disconnected from the real data.
Okay, so after wading through all those disappointments, the misleading answers, the hallucinations, two models actually came through. They delivered.
Yeah, finally. Some good news. And the results were pretty interesting. The undisputed champion, ChatGPT 03 Pro, the expensive one.
The $200 a month one, how did it do?
Flawlessly. Seriously, like a seasoned pro analyst, a chartered market technician, as the source described it.
Wow, what did it find?
It nailed a classic cup and handle on that Bitcoin chart. Provided the exact price levels, the dates defining the pattern, showed it really processed the data.
And the target.
Calculated it perfectly using the textbook method.
Yeah.
Measured the cup depth, projected it up, came out to $149,000.
And the visual.
Spot on. Drew the pattern right on the chart, exactly where a human would, looked perfect.
Any downsides?
Well, the cost, obviously. $200 a month is steep, and it was kind of slow, took over 4 minutes. But the quality was undeniable.
Okay, so the expensive one worked great. Maybe not that surprising. You pay more, you expect more. Was that the real story here?
But here's the twist. The real aha moment, the value champion, was ChatGPT 03, the Plus version, the $20 one.
Wait, really? How close was it?
Almost identical. We ran the exact same test. It also correctly identified the cup and handle. Its target calculation was $155,000, super close, using the same correct method.
Wow.
And get this, it was way faster, did the whole analysis in about half the time of the Pro version.
So 90% cheaper, almost the same result, and faster.
Exactly. That's the sweet spot. For most people trading crypto, stocks, Forex, this $20 version hit that perfect balance of accuracy, speed, and cost. That was the truly astounding part.
That is surprising. So what was the biggest surprise then from the winner's circle?
That the affordable ChatGPT Plus delivered nearly identical, high-quality results to the super expensive Pro version.
Incredible. Okay, let's pause for a quick word from our sponsor. Mid-roll sponsor, Reed. Welcome back to the deep dive. So we've seen the failures, we've seen the surprising winner. Now let's get practical. Based on all this testing, there's a clear step-by-step blueprint you can follow to get reliable results using that winning AI model.
Yep, this is the formula distilled from weeks of testing designed for reliability. Think of it like building with Lego blocks. Follow the steps, get a solid structure,
Okay, step 1.
get the right tool. Simple. ChatGPT Plus, the $20 version. It's the clear winner.
Don't bother with the free one.
Not for this. It's just not reliable. And the Pro version. Overkill for most. Stick with Plus. This is honestly the single most important choice. Don't skimp here.
Got it. Step 2.
Prepare your chart image. Garbage in, garbage out, right? Needs to be super clean.
Meaning no indicators, no lines already drawn on it.
Exactly. Use the hide drawings feature in your platform, like TradingView. Make sure the axes are clearly labeled, time on the bottom, price on the side. High-resolution screenshot.
And context.
Crucial. Make sure the asset name, like Bitcoin or Apple, and time frame, like daily or 4-hour, are clearly visible on the image.
Okay, clean chart image. Step 3.
Get the raw price data. This is the secret weapon against hallucinations. Give the AI the actual numbers open, high, low, close, volume, along with the picture.
It forces it to connect the visual to the math.
Precisely. You can usually export this as a CSV file. Paid platforms like TradingView make it easy.
Free options.
Yep. Sites like CoinCodex for crypto, Yahoo Finance for stocks, just need that raw daily or hourly data.
Okay, image and data ready. Step 4.
Crafting your prompt. This is your instruction manual for the AI. 2 main options worked really well.
Option A.
The comprehensive prompt, less. This is for detailed analysis. You basically tell it. Act as an expert technical analyst. Look for these classic patterns. Give me exact price levels and dates. Calculate a target and explain how. Draw it on the chart. Explain your reasoning. Very thorough.
Leaves nothing to chance.
Right. Option B is the simplified prompt. More for quick insights. More conversational. Something like, hey, analyze this chart. What patterns do you see? Pick the most likely one, show me the targets, and draw it on the chart for me. Still gets great results, just faster.
Okay, prompt sent. What's step 5?
Verify. Then trust. And this, honestly, is the most important step. Cannot stress this enough.
Don't just blindly follow the AI.
Never. You are the senior analyst here. The AI is your assistant. First, check the chart it drew. Does the pattern fit cleanly? Does it look obvious or kind of forced?
Makes sense.
Then, check the price levels it gave you. Do they match up on your own charting platform? Quick sanity check.
And the math.
Briefly double-check the target calculation. Is it roughly right based on the pattern size? Just a quick look. The point is, the AI finds and quantifies possibilities.
But the decision to trade, that's on you.
Always, your capital, your decision. That human oversight is critical.
It feels like that verification step, being the senior analyst, is the one people might easily skip, especially if they're impressed by the AI.
You nailed it. Out of all these steps, which one is most often overlooked, leading to poor results?
Skipping that crucial step of human verification.
Absolutely. That's the biggest mistake people make, trusting too quickly.
Okay, so that's the core blueprint, but you mentioned something else. A bonus technique. Confluence.
Ah, yes, confluence. This is where it gets really powerful. Confluence just means you have multiple independent reasons pointing to the same trade idea.
Okay, how do we use that here?
By combining the AI's analysis, especially on those bigger patterns, with automated tools built into charting platforms, like TradingView's All Chart Patterns indicator.
So run the AI analysis, then turn on the indicator.
Exactly. It's like getting a second opinion automatically. The AI might spot a huge multi-month cup and handle that the indicator misses because it looks for shorter-term stuff.
And the indicator might find
Smaller patterns, like maybe a bull flag or a pennant within that larger cup and handle confirming the direction. It's a checks and balances system.
So when the big picture from the AI lines up with the smaller details from the indicator.
That's confluence. Your confidence in that setup goes way, way up. That's kind of the holy grail traders are always looking for. High probability setups.
Can we walk through some examples, like how would this play out in different markets?
Sure. Crypto first. Bitcoin. We already know the AI found that big cup and handle target 149K to 155K, long-term bullish.
Right.
Then you turn on the TradingView indicator, and maybe it finds a smaller bullish pennant pattern right near the recent highs, also pointing towards, say, 149K.
Wow, okay. 2 independent signals saying the same thing.
Exactly. High confidence, long-term bull case. Now, stocks. Imagine a big tech stock, maybe Apple, maybe Nvidia, after it's had a nasty correction.
Okay. You run the chart and data through the AI. It identifies an inverse head and shoulders pattern near the bottom. That's a classic bullish reversal pattern. Suggests the downtrend might be over, heading back up.
So the AI gives you the potential reversal signal.
Yep. And maybe the indicator confirms with some smaller bullish continuation patterns as it starts to move up. Again, confluence.
Okay, one more. Forex.
Let's take EURUSD, maybe on a 4-hour chart. The AI spots a descending triangle. That's usually a bearish pattern suggesting price might break down. It gives you a target below the current price.
So the AI is suggesting a short setup.
Right. Then you switch on the TradingView patterns indicator, and bam, it finds a bear flag forming right there too.
Right.
Another bearish pattern signaling a likely move lower.
Two bearish signals lining up.
Exactly. High probability short setup. See how combining them increases conviction.
Whoa. Yeah, I can see that. Imagine scaling this, analyzing hundreds, thousands of charts like this every single day across all these markets. I mean, that's a serious edge that just wasn't really possible for most people even a year ago. It really is a potential game changer.
So, boiling it down, what's the single biggest advantage of using both the AI and these automated indicators together?
It just dramatically increases your confidence in the trading setups you find.
Makes perfect sense.
So, wrapping it all up, the results from all this testing are pretty clear, I think. While, yeah, most AI models are not quite ready for prime time and financial analysis,
Especially the free ones.
definitely. But ChatGPT Plus, the $20 version, when you use it the right way, following that blueprint, clean data, good prompt, human verification, it really can act as that powerful, affordable, tireless co-pilot
For technical analysis.
for technical analysis, yeah. Across any market, crypto, stocks, Forex, it's not about replacing the trader, it's about creating this strategic partnership with the AI, using its strengths to augment yours.
It feels like the question isn't really if AI will change trading anymore. It seems like it already is.
It absolutely is.
So the only real question left is, are you going to be ahead of the curve learning how to use these tools effectively? Or are you going to get left behind?
A provocative thought to end on.
Something to think about. We definitely encourage you to explore these ideas more and see how these tools might fit into your own approach, your own journey.